Victor, what's your take on this particular subsector of the tech sector, but other areas that had been overheated perhaps and now pulled back more in a more pronounced fashion than the NASDAQ?
Well, first, I would say in that note in particular, he points out really 5 different corrections that have happened in the SOX index of, anywhere from 8 to 15%. I think the caveat here is you're actually seeing some major technical violations in this most recent sell-off. I would say, though, that the idea of accumulating 2 particular names, NXP is interesting for the point that it makes around 48% of their revenue exposure is coming directly from automobiles. And as I think most people understand what's happening in the chip shortage in automobile space, while that might normalize into the second half of the year, it's an interesting place in the meantime, nonetheless. And Texas Instruments, for a completely different reason, that 80% of their internal wafer chip manufacturing happens internally. Look, this is a case of, as you start to see the markets adjust for inflation, and you can, however you want to frame inflation, whether it's that CPI number that we get out, where I think many people underestimated what that number was going to be. Many people underestimated the basing of impacts. But I think you had too many stocks that, for one reason or another, had gone too far, those high beta, long durations names, that we just got too expensive by every metric. The Fed itself had come out in their financial suitability report and highlighted all the red flags in terms of valuations and the potential for a correction to sort of catch fire, so to speak, given the risk premiums in the marketplace. So I just think today is a relatively decent sign. You're seeing the markets hold major technical averages. But in general, you're seeing more concentrated selling, and you're seeing some dispersion in markets, which I would argue in the short term anyway is a positive signal.
Shepard Smith here. Thanks for watching CNBC on YouTube.